Are you someone that's looking to purchase a home and get a lower mortgage rate and hack your mortgage rate? Well, I have the answers that you need. Now, there are several ways that you can get a lower mortgage rate. First, that is buying at a higher mortgage rate and then doing a refinance. Now, I understand you always hear marry the house but date the rate. But let me give you an example. I had several buyers purchase a home in the past couple months around 7%. And I got a text message today from a lender that I work with a lot saying, hey, I have a refinance program where anybody that is above, a 6.5 can refinance and get a 5.75% fixed interest rate mortgage through a refinance. And I'll put that proof up here. And with the refinance market, the rates are generally a lot lower. So this will help a lot of people. This is just a strategy, right? This is one strategy that you can use. Buying at a higher rate, and with a lot of these purchases, you can get the seller to give you to pay your closing costs, and you can use down payment assistance and not have as much money come out of pocket. Now, temporarily, you will have a higher payment. Then after, several months or so, you can refinance and get into a lower rate because the refinance rates are coming down as we speak. If you have to buy in at a higher rate, that's okay. Again, keep up with your credit. Keep your credit in line and then take advantage of the lower rates in the refinance market. And the person that you purchase, the loan officer or the bank that you use, they should be able to assist you with the refinance and letting you know when you're eligible and the costs associated. Now, when you refinance, you have to know that, you're starting your mortgage over, right? The 30 years starts over. But if you've just bought the home several months ago, you're not really losing that much time, if that makes sense. Now, here's the second thing that you can do. It is called a temporary buy down, also known as a 2-1 buy down. I'm pretty sure you've heard this, especially if you've been shopping for a home or if you at all participate in the real estate market. Now, how a 2-1 buy down or a temporary buy down works is your rate is 2% lower on the first year, 1% lower on the second year, and then on the third year, it returns to the rate that you locked in when you apply for your mortgage. So, for example, if you have a 7% interest rate, and you participate in a 2-1 buy down, you will have a 5% interest rate on the first year, a 6% interest rate on the second year, and then on the third year, you will return to a 7% interest rate. Okay. Now, again, this is something that you see with a lot of builders, these new home builders. They'll give you closing cost assistance and they'll buy down your rate just to, get you into the home and, just give you some sort of incentive. Right. And you may also see this with some sellers. Right. There are some sellers that say, hey, I'll pay out of pocket with, through seller credits and buy down your rate temporarily. So this is something that you can take advantage of. Although temporary is something that you can take advantage of to get yourself into a lower rate. Now, last but not least is a permanent buy down. Now, with the permanent buy down, this is something that will cost you a lot more money. You would actually have to get a real figure from a lender. But just to give you an example with the permanent buy down, let's just say, for example, it costs $3,500 and they call it buying down points. And this $3,500 may save you $100 a month on your mortgage, right? But that $100 a month may be worth it because if you really look at it, that's, 35 months, you've paid the $3,500 up front. So that's like $100 for 35 months. And let's just say, you figure, so that can give you that, that reduction in that monthly spend that you otherwise would have been paying anyway. Right. So that is something that that you can take advantage of, and it's different strokes for different folks. It may work for some and it may not work for others, and that's okay. But there are multiple options out there for you to get a lower rate and not just have to just be stuck with or think that, it's the end of the world because you're at 7% or 8% or whatever the day's rate is that when you apply for your mortgage. There are strategies, there are options. And, I believe that the rates are going to come down. The mortgage rates are more so tied to the bond market and the rate of inflation, not so much as the Fed and the Fed funds. Although it plays a role, it's not the only role. And as of right now, inflation is starting to get under control. It is starting to subside. So we will see mortgage rates start to come down. Now, it may not be like how we saw during the pandemic when people were out here in 2.99s and threes. We may not ever see that again. We don't know. But inflation has to get under control, and when the bond market improves, then the rates will also improve on the side of mortgages. Okay, so I just wanted to just bring you all this information, give you all some ideas on some things that can help you kind of look toward the future and strategize. Just it's all strategy, right? Just have a game plan moving forward, into your home journey, and so that you're not just out here just moving blind with no strategy or no plan of action. So I just wanted to just bring you all this information. I hope this helps. Feel free to drop a comment. My information is always down below. Feel free to email me. I'm here to help. Thanks for watching.